Let's talk about second lien financing and what that really means. What is a second lien mortgage, and when you need it, when should you use it, things of that nature. So ultimately, let's talk about a lien, Lien, right? A lien just means like there's a note, money that's owed, right? A note is you owe somebody some money, and then they place it against a home, and that's what makes it a mortgage. The home being the collateral. So a mortgage basically ties the financial obligation to the piece of collateral. That's what a mortgage does. It actually connects them, the deed of trust, all that stuff. A lien is just another word for that loan. And a second lien means that you are, or in this case, this loan is the second one on a mortgage. So maybe somebody bought a house and they got one, and now they're putting in a pool or doing something like that, and they get a second loan. That is a second lien. Or what we're going to talk about today as well is if somebody's buying a house and they get two loans at the same time. So let's talk about why that is and why somebody would do that. So first of all, we're going to talk about the purchase. Somebody's buying a home and they get two loans at once. So why would they do that? That's called, a lot of times it's called split financing, air quotes, split financing or piggyback financing or whatever you want to call it. Second lien is what it is, right? So these are not as common as they used to be. So call it pre-mortgage meltdown back in 07, 08. Man, they were everywhere. And even shortly thereafter, they were still everywhere. And the reason being why they're not so much prevalent today, in my opinion, is because finally, Fannie Mae, Freddie Mac, they've been increasing loan limits for the last decade. I mean, for forever and a day, it seemed like they were 417,000 was the max loan you can get before it became a jumbo loan. That's old school. That's early 2000s. But it used to be 417. So when somebody wanted to borrow, let's say 500 grand, they bought a $600,000 home or whatever it was, and they wanted to borrow something to avoid jumbo financing, they'd get a first and a second mortgage. They'd get the first at 417 or some dollar amount, and then they'd get a second for whatever's left over. And therefore they would avoid jumbo financing, which at the time had higher rates and all this other stuff. And they'd get one and two loans. Today, you don't see that as much. Mostly don't see it. I mean, it's a small percentage of what's done on the purchase side. And the reason being now, I mean, Fannie and Freddie, man, they've gone from 417 to now over 800. And so depending on when you're watching this, it could be even higher. So now they've kept pace and almost aggressively kept pace to where, the normal, air quotes, normal home buyer isn't, doesn't need financing beyond that, because if your average home is 400, 500,000, you don't necessarily need that, because mortgage insurance, while nobody loves it, it's still a lot of times much better than the second lien options, because the second lien, you get a higher rate on your first and a higher rate on your second. So when you put a second lien behind it, I don't know why the first goes up. It does. They just call it a pain in the butt factor, I guess. And so they charge you a little more on the rate when there is a second lien at the time of purchase. So for the reason of just the rates and the numbers don't make sense, typically the more economical solution is to have just one mortgage with mortgage insurance. And that's why you don't see a lot of those going on today. Now, second liens, a lot of times folks would take them back in the day. And even again, so much now, if the numbers make sense, mortgage insurance after a certain income bracket, 110,000 plus, again, that changes every year. So it could be more, could be less, but call it 110 grand-ish, right? For the household income, mortgage insurance is no longer tax deductible. So if somebody's making a ton of money and they're paying, big mortgage, it might make sense to take a first and a second to avoid jumbo financing, and or just because they'd rather pay interest that is tax deductible versus mortgage insurance. So that could be one reason to do that as well. Second liens, their terms, you can get a 30-year fixed rate. More often than not, a lot of them are offering what's called a 30 due in 15. I mean, it's a 30-year amortization. So your payments are based off 30 years, but it's due in 15 years, which means it's a balloon. So while you don't need to freak out, it's 15 years from now, but eventually 15 years from now, if you did that, you would have to figure out to either pay it off or refinance that loan. But that 30 due in 15 is a slash, 30/15. That's what that means. But you can get a 30-year fixed, a 20-year fixed, a 10-year, 5-year, 50, whatever it is, right? That is what second liens are for the purchase. Now, from a credit standpoint, second liens, they're typically a little tighter and harder, not a ton, but they typically have, higher rates. They might cost a point of origination. Their fees, I'm making this up, it's usually between $500 and $1,000, give or take, for all their fees. Every once in a while, not often, but every once in a while, we might have a prepayment penalty where it's like you can't pay it off for 12 months or something. So do check on that. We talked about it can be balloon payments. It is a separate, air quotes here, separate set of closing documents, meaning you go to closing and you sign the normal first lien documents. And then right behind it, while you're sitting there, they give you another stack of 20 to 50 pages to do the second one. Some banks, if and when you get a second lien, they might require you to become a member. Like you got to open up a checking account for 20 bucks and leave it there. And then lastly, second liens, a lot of times they'll have their own payment start date. So normal mortgages will typically, be due the first of the month, not late till after the 15th. But second liens, some of the banks will just say, man, if you close on the 23rd, your payment's due on the 23rd of every month. So just those are some of the things that are different. Check out, we do have second liens for like home improvement loans and HELOCs and things like that that you get after you bought the home. We'll put links down below for those, but this is more focused on that second lien for the purchase, the second lien mortgage for purchase loans. So if you have any questions, absolutely call us. I mean, we'll look at all these options for you. Sometimes we most likely won't bring it up just because, again, the economics in today's market, and again, may change. The economics don't make sense to sit there and recommend this. So if you have questions, absolutely please reach out to the Mortgage Mark team. We are here to help. And as always, when you think mortgage, think Mark.